As a trader, making money and then keeping that money to make more money is probably one of the hardest things to do. There are so many reasons why it's so difficult, and in today's video, I'm going to be going over some of those reasons. And then I'll also give you ways that you can avoid most of these. Right, let's start with the most obvious one, and that is people don't actually know how to trade. A lot of people come into trading without any prior education and just think that they can just make a quick buck, get rich overnight, like walking into a casino, hitting a slot machine and winning the grand prize just like that. But the truth is, if you trade like you gamble, you will lose like you gamble. I would do yourself a favor and get yourself some kind of education, at least get your basic education sorted, just understanding the basics of trading, and just get that basic understanding sorted before you step into the trading arena. And then slowly you can build on that education, open a demo account, and just trade every single day so you start getting some feel for trading before you actually go at it full time. The next reason I'm going to go over is people not really having a strategy, or strategy hopping, which is as a result of not having a strategy. I was actually there for a while myself. When I first started trading, I would just go to YouTube, search up best strategy, find a strategy that I thought looked good, and then I'll just take that to TradingView, go back a few months, do a little bit of testing, but without realizing that I'm actually influenced by seeing future price. I wouldn't even use the replay tool. I would just test some data, but I'm in my peripheral, I'm seeing the future price, and I just thought this strategy is so easy, I'm gonna do so well. Guess what happened when I went to the live market? I would just take loss after loss, and then I would just repeat this whole cycle. I'd go back to YouTube, find another strategy, and just do the same thing. The thing is, you have to first really understand a strategy before you even start backtesting it. Understand why it works, how it works, what is the main criteria of the strategy? How do you get in and out? You have to have a deep understanding of what the strategy is, and you also have to make sure that that strategy works with your personality and works for you. And then once you've got a strategy that you feel is going to be good for you, you have to go and you have to backtest it, and you have to get data. I would say you have to get at least 100 trades, and I would always suggest using software where you cannot see future price. You go back to a point, you cut it off, and it's kind of like trading the live market. And that's the only way that you will not cheat yourself. And you'll be surprised how many people actually cheat. Once you've done that, you then have to go to the live market on a demo account so you can get forward tested results. And that means trading in live markets. Don't do this on a live account, just do this with a demo and see if your results are matching your back test. And then after that, you take it to a live account with a very small balance and you start trading it for real and see how losing real money will actually affect your psychology, and see if you can trade it on a small account before you actually start scaling up. And the thing is, you've got to make sure that when you do take these losses, you don't just quit, you keep pushing through. Which actually leads me straight into the next reason, which is not having an edge on the market. Once you've gone through the previous processes I've talked about, getting a strategy, backtesting it, and then you're happy with the strategy, you've got to make sure this actually has an edge on the market. What does that mean? You've got to make sure you are ultimately taking more out of the market than the market is taking from you. And this sometimes will happen over a larger period of time, because sometimes what will happen, and it often happens, is the second you start trading your strategy, maybe it's psychology, maybe it's a bit of fear, maybe it's FOMO, or whatever, all these things that happen when you actually trade a live account, these things that affect you psychologically, they could affect it. So you've got to give it time, let your strategy play out over a longer period of time, and then see if you've actually started getting to a point that, even with the losses, even when you go through those losing patches, ultimately you are still taking more from the market than the market is taking from you. And that is what's meant by having an edge on the market. And the fourth reason I'm going to be talking about is discipline, or should I say a lack thereof. So you've basically done everything I've just spoken about. You've got your strategy, you've back tested it, you've forward tested it, you've done it on a live account. You've got to the point where you feel like you've got an edge, and you actually start trading with a bigger account. And then all of a sudden you start doing things that are not part of your strategy or part of your rules. You start holding on to trades when they're losing. You start cutting your profits early because you start getting fearful of losing money, or you have this fear of actually taking loss. You never did these things in your back test, so why are you doing it now? And it comes down to that fear factor, that fear of losing real money. Now the real money is on the line. Your psychology actually comes into play. And what starts happening is you let your emotions dictate your trading rather than let your strategy and your backtest and all your data dictate your trading. You have to trust your data. You have to trust your strategy, because if you don't, you will never find profitability. The next reason I'm going to talk about is not tracking your trades. So many traders have this reason in common. They're not keeping track of the trades they take every day, whether it be their winners or their losers. And this is such an important part of trading because you can continuously learn from all of your data, from your trades, whether they are winners or losers. And you will also start to see certain patterns. And it could be patterns that tell you when to trade with maybe slightly bigger lots because you know that these are higher probability, or maybe it's certain patterns or trends that mean you should be more cautious. So you start getting an understanding of the market, of your strategy, so that you know when maybe to go more aggressive or to pull back a little bit. And this will all help in your overall strategy and your trading in general. We can always learn more from our strategy, learn more from taking this data down, and it just can make our strategies better and stronger, which will ultimately help keep our emotions in check. The next reason I'm going to talk about is having completely unrealistic expectations. A lot of people come into trading, like I mentioned before, because they think they can make loads of cash. It's going to be easy. They can make a career out of it. They expect to make, loads, thousands, hundreds of thousands in a couple months. Maybe it's because they've seen their favorite social media guru talking about all the money they've made, the easiest strategy they've ever used, showing all the cars they drive, their lifestyle. Everything just seems so easy, and you think if they can do it, so can I, right? Now, I'm not saying you should not have goals. In fact, I think it's really important to have goals, but just make sure they are realistic. Having unrealistic goals is just going to add to your stress levels, which will ultimately heighten all your emotions and just make it so much more difficult to trade. Instead, set yourself small, manageable goals so that when you hit these goals, you feel a sense of achievement, and this ultimately will make you feel more confident in trading, which will set your emotions in a good stead, which will ultimately just make trading feel that little bit easier because you're not going to be stressing yourself out. You're going to hit goal after goal and slowly just work your way to the point of where you want to be. But just remember, one step at a time. The last and final reason I'm going to talk about is no risk management. Now, I left this one to last because I actually think it's probably one of the most important reasons, or the biggest reasons, why people actually do not make money consistently. Before I get into this final reason, I actually want to quickly touch on another reason that people also don't make money, and that's because they don't have enough capital when they trade. Now, we've actually solved this problem and can guarantee that you can get funded with $100,000 worth of capital by using our incredible AI prop farming system that actually improves and changes with the market conditions. We've actually already helped over 750 traders get funded with prop firms with $100,000 or more. So if you'd like to see a demo and how we can actually guarantee your success, make sure you go to www.propfarming.com and have a look at that demo, and have a look at the video we prepared for you there. Right, let's jump straight back to that final reason, which is risk management. Risk management is so important when it comes to making money and being consistently profitable in trading. This is the only thing that us as traders actually have control over. We cannot control where the market goes. We cannot control how fast or slow or volatile the market moves. And even though we have a very good strategy, we cannot control whether it actually wins or loses. The only thing, like I said, that we can control is our risk. We control how much or how little we put in a trade, and whatever our stop loss is, we know that that is what we are going to lose. So whatever your strategy, you can control the maximum a setup will lose, and adversely, what that setup ultimately will win. I see so many times new traders coming to the market and just saying, I'm going to trade one lot for every single trade, regardless of how big their stop loss is. Now, this is a massive mistake, because if you have a big stop loss, that means that loss will be way bigger than a stop loss that is smaller. And every single trade you take mistake, you'll be losing different amounts. So how on earth will you actually start to track your trades and get to a point that you're profitable? Remember, take control over the only thing we can control. Now, these were the 7 reasons that I wanted to go over today, but there are so many other reasons why traders are not making money. Now, I want you to do me a favor. In the comments, just put down one reason that has made it difficult in the past for you to make money, or maybe it's still something right now that you're struggling with that is stopping you from actually making money. Talking about it can help others, and if it's something you're struggling with now, others can potentially help you. So let's share and let's help each other out. I hope you enjoyed, and I hope you found some value in the video. If you did, please like and share, and if you haven't already, make sure you subscribe to the channel. With that being said, check out this video here where Adam actually updates you on his road to getting $500,000 funded without ever actually losing money to a prop firm. It's really interesting and I'm sure you will love it. With that being said, bye for now. We'll see you in the next video.